Hello all. So maybe we can start. So Florence Angles, who is leading our ESG practice in Western Europe, and myself as the Capco lead of Geneva office, we are very pleased to welcome you to this ESG event organized in cooperation with the Swiss Bankers Association and the State Secretariat for International Finance. So we are very excited to hear our industry experts about how the finance industry is addressing the climate change stakes through the implementation of ESG. When talking about the climate change, the stake and our stake is summarized into a very simple and very small number, 1.5. Countries and governments that signed the Paris Agreement and more recently the COP26 Pact commit to limit the global warming to 1.5 degrees Celsius, which is or seems to be the maximum our Earth can tolerate without generating dramatic changes. The COP26 president stated, "We can now say with credibility that we have kept 1.5 degrees alive, but its pulse is weak, and it will only survive if we keep our promises and translate commitments into rapid actions." Our planet is changing, and the changes are accelerating, leading to natural disasters and therefore human catastrophes. We all know that. At each individual level, we have the choice to adapt and adjust our way of living to limit or even reduce our contribution to the global warming. At company level, more and more initiatives are taken to raise awareness and have positive impacts on the climate change. Over the last years, under the pressure of governments, but also to answer to market demand, multiple initiatives have appeared. And one of them, for example, is the Uncover Net Zero Asset Owners Alliance, a group of 61 international institutional investors agreed on transitioning their investment portfolio to net zero greenhouse gas emission by 2050. This initiative represents the transfer of $10 trillion assets under management to portfolios aligned with the 1.5 degrees Celsius target. This kind of initiatives highlights the necessity to share a common framework of evaluation and measures, a common referential that enable reporting and transparent communication on rating, results, performance regarding gas emission reduction or reforestation. And it also highlights how finance industry can contribute to this climate change challenge. As tomorrow's green economy is taking shape, firms are committed to reporting and disclosure practice. And the COP26 set the scene for yet more ambitious climate goals and therefore stringent reporting requirements, explicitly asking for global alignment. In this context, what is the aftermath for the Swiss financial service sector? So industry leaders who are joining us today will give us an update regarding the COP26 conclusions. Dr. August Benz, Deputy CEO of the Swiss Bankers Association, and Mr. Christoph Baumann, Deputy Head of Insurance and Sustainable Finance at State Secretariat for International Finance, will give us an update on the COP26 decisions and how Switzerland and the Swiss banking sector will have to react and adjust. After our keynote speakers, we will open a roundtable and we will welcome two other industry experts, Mr. Jérôme Eschbach, as the Head of Impact Solution at BNP Paribas Switzerland, and Mr. Sébastien Renaud, who is leading the regulatory change at Pictet Asset Management, will share their point of view regarding the implementation of ESG and the concrete challenges that it represents to grant an ESG rating or performance. Any question you should have or comment you would like to share, please register them into the chat, which is already open for you, and we will try to answer them during our roundtable. And now I'm very pleased to welcome Dr. August Benz, and I give him the lead. Thank you.
Thank you, Audrey. Many thanks for being able to give a brief update around disclosure and transparency from a Swiss perspective. I would like to go through two specific slides with you. The first one, if you just jump to that one, is just to quickly bring in the perspective of Swiss Bankers Association. So as you see here, there are basically, we look at this from three angles, the whole topic of sustainable finance. There is on the one hand, of course, the investment side, where we've actually done quite a lot already last year in terms of publishing guidelines around the advisory process. There's the second topic around financing as such, financing, lending, credits, all these topics, where we actually also published a bigger study around the investment needs of Switzerland overall, which we published after the summer break, and more, of course, is happening on that end. And the third big element, of course, is capital markets. That's a topic that we're still working on, and then hopefully as well we'll be disclosing more information on that specific topic. But the topic of today is you see right in the middle of this chart, which is the whole thing about transparency and disclosure of climate risks and other topics in that respect. And that's what I would like to touch upon here, because of course that's very much encompassing all these three elements, and it is of high relevance to the discussions that we're having today. So if you now jump to the next slide, which gives you an overview or an attempt of an overview of how disclosure and transparency has developed over the last quarters and months, and it's still in the process of evolving. And it's basically 5 steps that I would like to highlight here very briefly, and I'm sure we're going to discuss this in the panel discussions later on in this session. The first topic I'd like to highlight is about, which is on the very left-hand side, which is titled as corporate and social responsibility. Of course, this is very close to what we see in the European Union as the CSRD regulation, the directive there, which here in Switzerland developed more in the context of the counter proposal that has been developed by the Parliament in terms of the Konzernverantwortungsinitiative. So that vote that we had last, I think earlier in the year, excuse me, I think it was in February, if I'm not mistaken. And then, of course, based on this, there was a consultation that was opened in April this year, and with the results being published, and that's the kind of graph that you see here in July this year, where the federal government, federal council declared pretty much that we're going to follow similarly to what has already happened in terms of CSR within Europe as well. The second element that you see here is around climate reporting. That's how I label this here. This is a communication that's come out by the Federal Council in August this year. After the summer break, they confirmed what was known before as well, is that TCFD will be the standard that the Swiss companies will also follow in terms of disclosure around the climate topic. This is something that that there will be a consultation around this as well that will be closing during the summer next year, and then we will see exactly how this will be developed. This will be turned into an ordinance, and that will mean that companies in Switzerland with more than 500 employees, so very similar again to the European regulation, will report around the climate as developments as well. If I move to the first topic, climate risks, that's a topic that has been discussed also for a number of quarters, particularly with FINMA, which of course has the responsibility to look at it from a risk perspective. Climate risk is a topic that has evolved as well over the last quarters, and has the FINMA now has also declared in May this year that the category 1 and category 2 banks, so overall 5 banks in Switzerland, will start disclosing information about their specific climate risks going forward. So that's another element that is captured here, very much from a, of course, overall financial market regulation perspective. And the fourth element, which I label here as greenwashing, that is a communication that's come out by FINMA at the beginning of November this year. In that guidance that they published, they summarize the whole greenwashing topic or structure it along 3 specific topics that you can, if you would see greenwashing, you would see this in 3 specific respects. First one, as an institute, if you claim to be sustainably active, then of course also from a institutional or institute's perspective in terms of resources and approaches, that of course this needs to be credible and be supported. And the second aspect that has to be looked at is of course from a product perspective as well. What does this mean in terms of product disclosure in specific? And the third element that FINMA points out in terms of greenwashing is the topic of point of sale, where our guidelines that we published June last year around the advisory process for private clients, that of course there is also certain expectations that of course really the client gets what is really looking for. And the second element that I have here on the greenwashing is a publication that Asset Management Association Switzerland and Swiss Sustainable Finance have published just around building bridges, i.e. I think it was actually last week, 1st of December, where they actually specify their recommendations around the second aspect of the guidance that FINMA gave us around product disclosure. What are the criteria that have to be considered when you do produce products in the context of ESG and sustainability, and of course specifically around climate topic. And the 5th topic I'd like to touch upon briefly here before I hand over to Christoph Baumann from the SIF is the whole topic about climate transparency, or I will probably label it even more as climate finance. This is a topic that has very much been a topic at the COP26. As Audrey just pointed out, we're going to discuss this in quite a bit more detail later on. But COP26, there were a lot of discussions around this topic about climate alignment, climate finance, Paris alignment, and how this could be transferred and transported into any kind of disclosure transparency approaches. And that is something that is moving very, very fast. There is no regulation in Switzerland around this or guidance around this topic yet. However, the SIF, and that's what the graph here quickly shows, is that the SIF has actually, or the Federal Department of Finance have actually communicated that there are certain expectations here, and I'm sure that Christoph will highlight a bit more just right after me certain expectations in that respect, and that's clearly a topic that is going to keep us pretty busy in the 2022, and because this is of very high relevance for us all in the industry. And with that, I would like to hand over back to Audrey, or then maybe specific to Christoph, but maybe first back to Audrey as a quick introduction to the disclosure and transparency and the developments that we have seen in Switzerland so far. Thank you very much.
Thank you, August. Well, then we can jump directly into Christoph's speech. So please, Christoph, go ahead.
Audrey, thank you very much, and also thank you, August, for this fantastic intro speech. Let me maybe start with a quote from the former Secretary General from the OECD. We need a big fat tax on carbon. And what I mean by that is that no matter how good the disclosures are, it doesn't overcome the fact that a global carbon tax is the most efficient instrument we have in our disposal, and we should really strive for that internationally and also nationally to keep that, or to increase that as far as possible. Nevertheless, we see an urgent case for better climate-related disclosures, and that has various reasons, I would say. The one reason is that more and more the physical risks associated with climate change can already be felt in the economy. And I think it's for the financial industry adamant that they have a better transparency on how physical risks impact the profitability of the companies they're investing in or that they're financing. And as such, that leads to a higher demand for disclosures. On the other hand, we see lots of companies that have a certain impact, a negative impact on the environment, and that might have a transition risks, meaning that if there is a carbon price being raised, that they might have an impact on their profitability, or they might have legal risks or reputational risks. And especially for asset managers, it's key to understand, to measure that risk, to have a optimal risk management on their side. But it's not just about the risks, the need for disclosure. It's also really to be able to really support these companies on their transition towards net zero. As Larry Flink from BlackRock says, it's a tectonic shift in capital underway, and there's a huge opportunity for financial institutions to really advise these companies, to finance these companies on the way to in their transition, and for that they need disclosures on a company level. But it's also for with regards to shifting customer demands. I think the newer generation and more people in the asset management, they demand to have a certain sustainability aspects integrated in their portfolio management, in their products they invest in, and that also leads to a lot of new disclosure needs for financial institutions to be able to really offer this innovative products. And as August Benz already mentioned, in Switzerland there's actually two bodies of work we are currently pursuing. The one is on institute level. There we're focusing on the task force of climate-related financial disclosures. August already mentioned that we're currently preparing the ordinance to make these task force recommendations mandatory as part of the Responsible Business Initiative. And there, the goal is really to focus on larger companies. So we focus on listed companies as of 500 employees and some further criteria. But with that, we capture really basically the entire turnover of the stock exchange. And the focus of these disclosures is really on establishing comparable, adequate, forward-looking quantitative data. So really data that the financial industry can use. So think about CO2 targets, think about transition plans, think about forward-looking portfolio alignment metrics for financial institutes. So this is really the current work we are focusing on. And this is really in line with international developments. We see very similar developments in the European Union, in the UK, Canada, New Zealand, Japan, etc. It's also very much in line with the announcement at COP26 of the establishment of an International Sustainability Standards Board as part of the IFRS. And they will really build these global baseline standards, which I'm very confident will be in line with what we are currently pursuing. I think they will base very strongly on TCFD as well with this initial climate focus. As August Benz mentioned, we also have the second part, and the second part got really prominent during COP26 with the announcement of the Glasgow Financial Alliance for Net Zero, with this announcement of these transition plans. Once you have this focus on how to get to net zero as a financial institution, you also need transparency on are you already aligned? Is there, based on the portfolio you have, are these companies, do they have the transition plans in place to get you to what you pledged? And there the Swiss government has made a recommendation 2 weeks ago to really establish such transparency on financial products and portfolio level. And we are now working very closely with NGOs, with universities, and with the industry to find minimum or quality criteria for the government to support a voluntary climate score. So think about what we have on the fridge, like this rating or this score of giving you an easy understanding of something is aligned with the Paris goals or not. And this is the direction we would love the industry to go to. And we want to support the industry by really helping shape the quality criteria, so to ensure that there's a maximum level of credibility, which we think is absolutely key, also both from an impact perspective, but also obviously from a framework condition perspective, that the banks and the asset managers, they really can promote this credibility across the borders. This work we've done, as mentioned, we really believe this is really in line with strongly with the GFANS initiatives, with the various net zero alliances. It's really focused. It's not a big regulatory framework we're building up, not at all. It's voluntary, and it's a simple score that just tells you Are you aligned with the Paris Agreement? That tells you on a product level, but also as a client on a portfolio level. Is my portfolio aligned with Paris? Yes or no? And then it leaves it up to the bank how to show how can you get this portfolio more aligned? How can you make impact based on that metric? Thank you very much.
Thank you. Thanks, Christoph. So yeah, keywords, transparency, alignment, to increase the credibility. And so yeah, I think through your speeches, after Augustin and Christoph, we really understand how the finance institutions can really play a huge role, both in setting kind of examples, but also in supporting companies into the transition they are starting to a net zero situation. So now, oh, sorry, my webcam. Yeah, share my webcam. Sorry, I was. So now we are opening the round table. So Florence will start with the first questions we have. And so again, welcome Jérôme and Sébastien to this round table. Florence, I let you introduce the first question.
Yes, thank you, Audrey. 2021 is an important year for ESG, sustainable finance. We've got in Switzerland, more particularly in Geneva, last week a big event called Building Bridges, which wants to accelerate the transition to an economic model aligned with UN SDGs, with finance as a key catalyst for change. As we have more focusing on climate risk, COP26, the climate summit in Glasgow, made some improvement, made some progress, but some may say that was not enough. So they wanted to reach 4 goals. One was the way to mobilize finance. And we wanted to know from our speakers what were the key outcomes of COP26 and its impact on climate risk disclosures. August, Christoph, if you want to begin.
Yeah, maybe Florence, maybe I start kick it off. Of course, I very much look at it from a associations perspective, and we basically see three outcomes or conclusions that we make out of COP26. The first one is, you highlighted a bit already, is how do we mobilize private money? We did publish after the summer our study about the investment needs for Switzerland to reach the 2050 net zero goals, and we concluded there, that roughly, you would need to invest over the next 30 years roughly 30 billion to actually reach as an economy in Switzerland these net zero goals. If you compare this to the overall federal budget, which is around 70 billion, then it becomes very clear that, of course, the public sector, of course, will not be able to finance this. And that, of course, is a key element that was also discussed in Glasgow. How do we mobilize the private money, and that really is the question of also towards politicians. What incentives do I make? And our study gives a few ideas about what could be done. You could give tax incentives, you could the usual things that you see, but there's very other innovative things as well that you could possibly do to trigger the private investments as well. And then of course the question is about who will finance this at the end of the day. So that's very clear to us that there needs to be private money, a confirmation, and there we would claim that Switzerland is actually already on a pretty good path in actually achieving that goal. Of course, this looks very different, of course, if you look at other countries. Then the second biggest topic for us was the whole topic around climate alignment. Christoph just highlighted this a bit. How do we really get this done in Switzerland? That's a very big question that will keep us very busy for the next months and quarters. There we've seen, I think it was a weekend after the last weekend, there was an article and an interview with Daniela Stoffel about her ideas in terms of a Gütesiegel, as this is called in German, so some kind of a label, still to be discussed exactly how this looks like. And Christoph also alluded a bit to this before, and maybe expands a bit on this. So that for us is something that we should make very concrete now in Switzerland. That clearly was for us also an outcome of the COP26, that this climate alignment, there's a lot to be done, and there's a lot of activities. So the train is really moving now. So what exactly is the Swiss role or that we have to play here? And the third topic for us from an association's perspective is again back to financing, the topic around blended hybrid finance. If there are areas where private investments can't support or can't make the difference, you know, what possibilities are there? And in our view, of course, there also needs to be quite a bit of work to be done in that respect. So that's very much from an association's perspective, but hopefully that you know, helps the discussion that we're going to have soon.
Yes, maybe to elaborate very briefly on the question, was COP26 a success and what was the impact on transparency? I think it's very important to distinguish the actual COP negotiations from the side events and from the presidency's agenda, which was more focused on mobilizing finance. But from an actual negotiation perspective, I wouldn't say we're unhappy with what has been achieved. I think we really finished all the negotiations part of that were still open with regards to the Paris Agreement. We now have an Article 6.4, a global carbon market, which can be built. We've set in stone the process for the post-2025 climate finance negotiations. Unfortunately, we had this fast down versus fast out wording of coal in the official communique at the end. So I think there's a mixed feeling, but it's not too bad. But I think really from a finance perspective, what happened was not an important part that was not part of the negotiations, but all these side events, all these presidencies agenda, as August mentioned as well. And there obviously the announcement of GFANS, the announcement of ISSB, and this whole focus on how to build transparency that's forward-looking, that takes into account a company's transition plan and doesn't yet and isn't simply binary and says, are you green or you're not yet green, and therefore you're already excluded, no matter if you're on a good path to be green in the time that's demanded of you by your pledges or by your jurisdiction you're in. So I think there we're really happy. August Benz mentioned also the article in newspaper. I just wanted to add, I think our thinking is that we end up with, or one difficulty we see in the market is that there's a lot of claims of greenwashing, with some of which one might agree, some of which are more doubtful. But I think it's what we all agree is that there's really a demand for credibility, and I think that all financial institutions, they really want to prove the credible processes they have and the credible transparency they want to build. So what we want to achieve together with the industry is kind of a seal of approval, or a quality seal that says, look, this transparency, this climate rating, this climate score, so to say, this is built with methodologies that fulfill or they comply with the minimum criteria that we've been defining. So I think it needs to be seen in that regard. But again, this is all voluntary, so there's not yet a thinking of making this a regulatory part of regulatory work or so. Thanks.
Thank you. As was mentioned before by August in the keynotes, the regulatory agenda is moving forward in the UK, in the EU, and also in Switzerland, with the Federal Council in August that have decided on parameters for the future mandatory climate reporting by Swiss companies, and also FINMA, which requires large bank and insurance category 1 and 2 to disclose climate risk. The pressure is increasing and it will apply to large banks. How banks today are integrating related risk within the risk management framework, as ESG risks are difficult to quantify and also to apply for climate risk factors. So even if you've got some data from service providers, and also some specific variables such as carbon price. But the question today, how will you consider climate risk, transition risk, physical risk into your risk management framework, considering the IT aspects, the data aspects, governance aspects? Maybe Jérôme and Sébastien, do you want to give us some insights about that?
Sure. Thank you, Florence, for the question, and good morning, all. Clearly, as being a subsidiary of a French company, we adopt an approach which is aligned with the group. So it's not only a Swiss perspective, but also a more general European, let's call it this way, perspective. And we have various layers to integrate this new dimension. First of all, is by integrating the climate policy at the highest level of the company. So it means that in the board of the company, we integrated this climate expertise, and we have 4 members of the board who have an expertise in climate-related risk. We also adapted the framework of remuneration. So it means that we have now on a group of almost 200,000 employees, we have 7,000 managers who have their remuneration aligned with some challenges in correlation with climate change. And it means also transforming in depth some functions, and the risk, the internal risk function that traditionally analyzed the traditional financial risks such as credit risk, market risk, operational risk, is now transforming itself in order to integrate also the analysis of the climate risk. So it means that they will not consider only the risk that I mentioned before, but they will analyze before granting a loan to a company to which physical risk the company is exposed, to which transition risk it is exposed. And this is something completely new that needs not only data, but also training, because it means that now the credit officer must do much more to this extent. Risk being the second line of defense, first line being also the business itself. So everybody must gain those new competencies to integrate this new dimension in the assessment of our clients. So this is mainly on the financing side. And if we want to focus on the investment side, on the wealth management side, it means that we have to assess the carbon intensity of companies, the reporting they do or do not do on their emissions, what efforts they do to reduce greenhouse emissions, and to which extent they decide to integrate to the use of renewables. And obviously, as you mentioned, Florence, the main hurdle today is the one of data. Which data do we choose to use? How we make it available in the various systems, considering the legacy systems that we have. This is a very hot topic.
Thank you, Jérôme. And it's interesting to have a subsidiary of an international group and to have also on the floor a Swiss group in order to know how to deal as the regulation is different from the EU compared to Switzerland. Maybe Sébastien, do you want to give an outlook? What is the current situation within Pictet Asset Management?
Sure. Thanks, Christoph and August, for the key speeches. I think I could add a couple of points on those because it is a great introduction. You talked about COP26 and the key outputs, and clearly on our vision, what is key is transparency, and you repeated that several times, but also comparability. If we want to avoid greenwashing, we need to be able to compare the offering and to have something that is understandable by all the industry. And 2 elements are there in terms of coverage with the TCFD or replication of TCFD in several countries. We have the UK that has announced a similar setup as TCFD with largest traded companies and banks, insurers above 500 employees and 500 million turnover. That's key to give us that bigger coverage that we need to analyze the data, but also in terms of standard. I mean, we have that proposal from the IASB that has been prepared with the help of IOSCO. But currently, as you said, Christoph, it's only voluntary. So IOSCO has been a major player in that, but without endorsing it fully. And the day they endorse it, and maybe it will happen, it will help us a lot to have something that is across all the industry, that everyone uses to avoid different way to give that transparency that kills a bit the purpose of it. So clearly that's a good step, but we need that last one to cover completely our objective. Then on Switzerland versus Europe, as for Jérôme at BNP, we look at that at a group level. So we have not separated Europe versus Switzerland or Europe versus Asia or whatever. When we implement that transition, it is at a group level. And we have one single framework with similar processes and tools as described by Jérôme. By examples, we have the same exclusion policy and the same responsible investment policy across all the products and locations. We have replicated part of SFDR in our prospectus, be it in Europe, obviously, but also in Switzerland. So everything is made towards a single objective, to give that transparency and to act on that climate risk across the full range.
Thank you, Sébastien. And in order to give a broader picture, because you know the regulation is applicable to big banks and big insurers in Switzerland, category 1 and 2, maybe August, Christoph, do you want to give a global overview of the current environment related to climate risk disclosure or climate risk framework for the global ecosystem of Swiss banks?
Maybe, Christopher, I quickly give a quick introduction, maybe then you can expand further. So there's actually, the BIS is actually also started working on this topic, also very much from a supervisory perspective. So there will be actually a consultation closing mid-February on climate risk and how this could be, integrated best into a supervisory process and approach. So also in that respect, things are moving forward, and I would expect that actually this going to be, happening pretty fast. That this kind of climate risk integration into the overall regulation as such will be a reality pretty soon, actually quite widespread from a global perspective. But that's, just the current assessment on my side. But Switzerland, I think here is already on a good track, starting with category 1 and 2. And there's things to learn at this point in time, because of course nothing's really settled in stone yet, and this the overall topic of sustainable finance and methodologies and how you can do it, of course, is evolving so fast that what may have been the best approach last year actually may not be the best one today, and certainly not the best one in a year or 2 years time. So I think we as an industry and also from a supervisory perspective need to remain flexible on that topic, because this is a very fast evolving thematic area that we should be all very aware of this is moving very fast. Maybe Christoph, you have maybe an additional angle to this, yeah?
Yeah, just 1 or 2 small comments. On nationally, I think with what FINMA did, it's focused on category 1 and 2, as mentioned. Once we implemented the ordinance on TCFD, it will be a bit broader. We estimate that we capture roughly 60 financial institutions, roughly 40 banks and 20 insurance companies in Switzerland with this mandatory TCFD recommendation. Internationally, I'm very happy actually. Last year was key that the world unites behind the ISSB work, which I think has happened with G7 and G20 communique. It's clear part of the G20 Sustainable Finance Roadmap. So I think there is no question anymore that the world is kind of uniting behind the ISSB work. We're now looking forward to seeing actual results coming out. We expect that to be next summer. And then it's interesting to see how then the governments that are currently doing mandatory implementation on TCFD, how that then works together. But I'm confident that what the ISSB is doing is doing a global baseline, so to say, and then certain jurisdictions can go further, as might Switzerland, with the double materiality approach that's mandated by law. And the other thing, I think that internationally there's already a change in focus. So in the sense that we see that the climate part is now on good track. So you now see all the various work streams on biodiversity lining up to ensure that once ISSB has produced the standards on climate, that the next important topic is aligned there. And there we're optimistic with the current TNFD, with the Task Force on Nature-Related Financial Disclosures, producing some standards, but some recommendations that could flow into or feed into the ISSB, but they only just started a month ago. So it's hard to tell yet how the adoption of such recommendations will be. But that might certainly be, or that will certainly be the next topic, I estimate.
Thank you. So we see that climate risk is on the agenda, but also there are some practical challenges in the identification of climate risk, and also related to the other risk category, also measuring and taking into account scenarios where the time horizon is not the same. There will be also some aspect related to calculation, and also the aspect of double counting. On the end, finally, the aspect of mis-selling and conduct-related risk. So from a practical point of view, what are your main challenges when you're considering climate risk into your risk management framework?
If I start, currently our main challenge is around data and around data coverage. So as alluded to earlier, the main issue we had until now is a misalignment on the agenda, as you said, with the fact that SFDR was imposing us to give that transparency before the issuer were forced to give that transparency to us. And obviously that's a big issue in the framework. That is probably solved by the postponement of SFDR. And with that, it gives us more time to receive those data from issuers that currently are lacking. So we have a partial coverage. We have all the processes in place, and all the market data provider are ready to feed us with that. But they are lacking the main information from the issuers. And that's the key challenge for 2022, to reach that minimum coverage that is necessary to give a significant transparency to the market.
And maybe to complement what Sébastien just said, one specificity related to a big company which is present in more than 40 countries is the fact that we have many entities with different approaches, different needs, and each entity will have its own pace on this, and will get data that's maybe not the same as another entity of the same group. So we have there an important challenge of mutualizing data in order to ensure that we have within the same group consistent data across the various entities, and that we do not pay twice for the same data. So that's the reason why we decided to create at the group level kind of a huge data lake, where we will put all the data necessary for the various entities, and each entity will feed itself in this data lake in order to make sure that we have consistent data available across all the group.
Thank you, Jérôme. So data is a big issue, as we can see in the EU. It's part of the scrutiny of the regulators. You know, the ECB has provided some guidance also in terms of expectation concerning climate risk. The institution should have a forward-looking, comprehensive and strategic overview about climate risk. And you know, EBA, the European Banking Authority, has mentioned also the aspect of calculation, how to integrate and calculate three main approaches related to ESG risk. It is broader than climate risk. The portfolio alignment methods, the risk framework methods, and also the exposure methods. So we can see that EU and also UK are maybe a step forward. So from your point of view and what you can see in the market, do you see some gaps if you're looking at the way that Swiss institutions are tackling the aspect of climate risk compared to the EU or UK counterparts?
Maybe one first comment would be on the fact that the gap is not so huge in the sense that TCFD is, in any case, a kind of common approach with it's a cross-border kind of framework. So it means that it's a framework that applies on both sides of the border. So I wouldn't point there a huge gap. Maybe one other difference would be that on the European side, the framework is more stringent. It's a hard regulation, where on the Swiss side, it's still more guidelines at this stage.
And maybe, Jérôme, if you want to explain a little bit more, do you see some differences between what is done at the group level in Paris, for instance, and what is done in Switzerland, in Geneva or in Zurich?
What we do in Switzerland is applying the group recommendation. So we follow mainly what is required at the European level, and applying also all the TCFD recommendation which apply to both areas.
Maybe if I can add to that, I think there's lots of similarities on climate risk disclosure. First of all, the current Swiss law, which I mentioned, is the basis for the TCFD implementation, is basically a copy-paste of the NFRD from Europe with the same criteria. Now, obviously, Europe is planning to expand the criteria to cover also non-listed companies of the real sector, which is not something that's then automatically taken over in our law. So I think on the scope, Europe might soon be broader than Switzerland. But another very close similarity is the double materiality. Unlike most jurisdictions that are implementing TCFD, both Europe and Switzerland are doing it on a not just financial risk perspective, but also on impact towards the climate perspective. So not just outside in, but also an inside out perspective. And as such, we will have a very ambitious implementation. I would personally, based on the current draft, say that our implementation is very much geared towards the needs of financial markets for comparable quantitative data, and as such might be in this regard more ambitious than the European Union implementation.
Sébastien, August, do you want to add something else?
I fully agree with what Jérôme said. We are on the other side of the border. So as a Swiss group with a major presence in Europe, but as I said earlier, we have implemented it at the group level. So we have implemented TCFD and all this in our risk framework, in our investment policies, etc., without any difference from Swiss to Europe, and we don't see why there should be any difference.
Yeah, maybe one final comment from my side is I think for us what is important is that the underlying base now seems to be pretty much in most places TCFD, being it SFDR or all the other activities that we see. So I think that is for us very, very confirming that Switzerland, we have, very early on, decided that this is the standard that not quite the golden standard, but at least the standard that will be mostly widespread. And then I think we put our money on that one, and it really turns out to be that this is the case. So that you will see variations, of course, between different regulations. That is a reality that you have everywhere, but I think it's not deviating too much at all, and seems, at least from our perspective, applicable. But the base that is for us important remains all the data collection that you do on the TCFD.
Well, thank you so much. So we will see that we will have international standards such as TCFD on climate risk. So we have discussed the first keynote aspect, which was related to climate risk. Now we will try to discuss a little bit more about the second keynote, which was around net zero. So net zero is today a key pillar of finance industry. We heard a lot about net zero asset management initiative and net zero banking alliance. So what do you think? How do you tackle? Do we need also some international standard in order to take into account the aspect of climate? So what are your views, and how do you manage this kind of net zero initiative within your institution?
So maybe, please, Jérôme, if you want to start.
No, go on, Sébastien.
So at Pictet, we have two conventions. First, that climate change has a material impact on the price of assets. And on the other side, that our investment activities have an impact on climate change outcomes. And building on this, we have subscribed to several initiatives to act on this. On one side, indeed, the Net Zero Asset Managers Initiative, as well as the SBTi Business Ambition, both targeting that 1.5 degrees maximum. And at the group level, we have that objective of net zero by 2050. That's a first pillar, I would say. And the second is on the political aspect and the lobby that we can act on with signing the UNPRI, the UNPRB, but also the Swiss CEO for Climate Initiative. We have also the Global Investment Statement on Climate Crisis, and so on and so forth. And all that is part of our responsible investment policy. It is part of our investment process, building that through monitoring, and we are back to the transparency that we discussed earlier, through engagement to contact and act on the policy of those companies we invest in. And the last result solution being the rebalancing if there's no other outcomes than just getting out of that position. And with those actions, we are convinced that we are acting on that target and that we can achieve it in time.
And on BNP Paribas side, maybe just to say that net zero is not something completely new, because we already committed a few years ago to exit thermal coal financing by 2030 in OECD and by 2040 worldwide. So joining Net Zero Alliance is just a way to formalize commitments that were already taken. So it means that on one hand, we decrease the financing allocated to fossil fuel and carbon intensive industries. And on the other hand, we increase the financing of renewables and also financing the research on clean hydrogen, which is key also in this transition. One initiative that I can quote is the creation of the low carbon transition group, because we have the conviction that it's not enough to say to our customers, okay, we stop financing this kind of activity because it's not aligned with the Paris Agreement, but we really want to accompany them to the transition. That's the reason why we launched, it was 1 month ago, this transition group. It's a kind of internal consultancy group made of more than 200 experts, and their mission will be to work with our clients in the energy sector to help them transitionate in order to accelerate the pace of the transition.
Thank you, Jérôme. And August, Christoph, do you think we need an international standard for net zero if we compare it to what we have said before in terms of TCFD?
If I may jump in here quickly, and so I'm very optimistic about that development, because when you look at the people behind GFANZ, it's actually the same as the ones that's coordinated the TCFD work. So it's Bloomberg and Mary Shapiro and the other talented staff that moved now from TCFD, since that's now part of the ISSB workstream, to the GFANZ, and are leading their various work streams. And the work streams are about how to really have credible transition plans, how to have transparency that goes into these portfolio alignment methods. So I'm very optimistic that what they're producing there, together with all the financial industry as part of there, it's going to be market friendly, principle based, and really in a form that can be implemented and adopted quickly by the market. So we are very keen to work together with them on our side. We're also keen to see lots of Swiss financial institutions already engaged in these work streams, and we're in general optimistic. But I don't think there's going to be a standard. I think it's going to be recommendations similar to TCFD that are then used by the various financial institutions. And as mentioned, our TCFD recommendation implementation might refer to transition plans as well. And there, again, it will reference what TCFD and GFANZ is doing.
And Florence and Chris, I can only support this. You know, that is the work that I kind of referred to at the beginning. That's the work of very much of 2022, of how this you know, develops, and we will certainly be collaborating very closely with any kind of tasks that have to be supported here.
As we are almost at the end of the roundtable, and we are also at the end of the year, the last question will be, what are your main priorities for 2022?
I can start with one. Our focus would be on the taxonomy, the green taxonomy, with the first two objectives on the climate. The focus there is again on data sourcing, as we discussed earlier, to analyze and integrate those data, to compare what is coming from the industry, to achieve quality standards that are sufficient to be disclosed, to integrate that in our investment process, but also in the reporting, to disclose that by year end as it is required. So that's clearly a big target. It's a big challenge when we see what we have at disposal as of today. But I'm convinced that the effort will be made across the industry to reach a standard that is of a good quality.
On the BNP Paribas wealth management side, our main challenge for next year will be to integrate this new regulatory framework as a taxonomy with our internal framework, because we are quite in advance in the sense that we launched a few years ago an internal rating methodology to assess the sustainability of most of the asset classes. So it means that we already had a referential for single lines, for funds, ETFs, and so on, in order to make the assessment of the sustainability of our clients' portfolios. Now regulation is coming with its own referential, So we'll have to think about the best way to make a smooth integration of those two referentials, because we have the conviction that our way to assess financial instruments is complementary to what is proposed by the regulation.
Maybe if I take the next turn, one we've already mentioned, Florence, this is climate finance that will keep us very busy for the next year, and we look forward to working together with Christoph and colleagues, and with the representatives from science and universities and academia, and also with NGOs. And the second priority that we already see is, we've published one or the other guideline on these topics already. Should we, broaden the topics, or should we go further? That will be another big topic that will keep us pretty busy in 2022.
And maybe next to what August just mentioned, I think our focus is on the one hand to really bring across the finish line the TCFD regulation. On the other hand, we're also working towards industry agreements in the context of the net zero alliances. So we will start engaging with the industry early next year. And the last point I would say is we are still also assessing the need for regulatory action in the area of greenwashing. There, I think a main focus in the first half will be to really understand what the industry is doing, given that there's a lot of dynamics on that side, also with regards to potential self-regulation, etc. So to see how that is going, and then to make our assessment in the second half.
Thank you so much, August, Christoph, Jérôme, and Sébastien, for your great insights about climate risk and also net zero. Now I will give the floor to Audrey in order to give us closing remarks and conclusion. Thank you so much again.
Well, so first of all, I really want to thank you all, because you gave us, I think, a very clear and deep view on the challenges the industry is facing, and how also it is adjusting itself to address all these challenges. I think everybody knew that, but it's clear now. We have the journey is just or has just started, and we have quite a long road in front of us. I was happy also to hear that in the international point of view, the framework for climate change is on good track, and that already the next challenges like biodiversity are already tackled, and that's, I think, it's a good news. At least I take that as a good news. But we see that the challenges are still very numerous and high on the operational side. On the ground, it's still a challenge to find the right information, the right data with the right source, to be able to not only approve this information, this data, but also to share it across the different entities. So yeah, it's a big challenge for the finance industry, which not only has a role to play in has a role model, if I can say, in the economy, but also a huge role to play to support the companies into their transition. And Sébastien and Jérôme, you gave us a different example on how your group are trying to develop different initiatives to support the companies into this net zero transition. So really, well, for Florence and myself, in behalf of Capco, we really thank you, the Swiss Bankers Association, as well as the State Secretariat for International Finance, to organize this event with us. Thanks a lot, Jérôme and Sébastien, so from BNP Paribas and Pictet Asset Management, to take part to this round table. And thanks all to attend this event. Should you have any question or remark or comments, please reach out to Florence or myself, and we will be very pleased to answer you. I wish you a very nice afternoon, and thanks again for your participation.